Let's go to VK Sharma, Head of Business, Private Broking and Wealth Management with HDFC Securities. VK, morning. Thank you for joining us. What do you want to start with? Global cues, local cues, credit policy, or Infosys numbers?
Good morning, Nikunj. I think it will have to be a combination of all of these because we'll have a finger in every pie. We'll begin with where we have left Infosys. And Infosys, whatever guidance for Infosys, it applies to itself. It doesn't apply to the rest of the sector. That's what you were discussing, and I totally agree with you, because guidance for both NASSCOM as well as the other IT companies based in the US, which are India based but operating out of US, have been cognizant, for instance, guided at 23% for this calendar year. So I think it applies only to this. The rest of the sector will be able to carry its own cross. I don't think there is room for any panic there. But positions have been built on the shorter side, and everything is built upon this factor, that whether Dr. Subba Rao will oblige or this week or not on Tuesday. So our sense is he'll have to grudgingly oblige, because the markets are looking for a directive, markets are looking for confidence, and a 0.5% repo rate cut is the only thing that can give or restore some confidence to the markets. Nothing else will be able to restore the market back to health.
So VK, if there is indeed a rate cut of 25 basis points, do you think that could significantly change the landscape for the market and we could break away from the trading range and see higher highs?
Asha, my sense is that we'll not be able to break away from the range of 5378 that you have set for ourselves on the higher side, and it will be well within that. And it could so happen that 0.25 repo rate cut may not enthuse the market, and we could, instead of ending higher, we could start ending lower. So in case the 5078 level breaks, that is quite far away from the current levels, I think we'll have to watch on that particular day. We'll have to go into Tuesday with stop losses intact, and if those levels break or a 0.25% cut comes, I'll rather like to lighten my positions rather than build more ones.
VK, what explains the price action and volume action in some of these consumption names? Yes, in 2011 they managed to outperform when global markets were choppy, when liquidity was tight, but right now consumer stocks are also experiencing plenty of headwinds, high commodity prices and a drop in demand.
I think you have nailed it on the head. And the third, let's say, headwind that would come is from the fact that if the Met Department tomorrow, if they were to say that you have the monsoons which are slightly below normal, I think that could take the wind out of the FMCG stocks which are currently moving up. However, for those kind of value-added products, for instance, companies like Zydus Wellness, they could still continue to do well, even if the monsoon scenario is not good, because they don't sell their consumers to that kind of a market. But the likes of Lever, I think definitely will take it on the chin in case we do see some kind of adverse, let's say, guidance from the Met Department.
You know that HDFC Securities, what are your top ideas for FY13?
I think we are sticking with the banks, and we feel that Bank of Baroda is a good pick among the PSU banks, because not only the CAGR has been good in terms of business growth, but also the assets, the bad assets are under control, and NIM is on the increase. So to that extent, Bank of Baroda, we are advising not buying aggressively, but will accumulate from the current levels to somewhere around 720 levels on the lower side. And apart from that, we are looking at in a good measure in the other mid-cap stocks. So those are mid-caps, so I don't think it's a right forum to talk about those at this point of time. But on the large caps, apart from Bank of Baroda, we'll look at Kane also, because we feel that there is going to be traction in terms of the profitability which will rise, and the cost which have increased because of the higher charges that it will now pay will be more than compensated by the fact that it will have the production will ramp up from the current quarter itself.